just kind of like, we'll go through this. We're going to go about box, market update, ESG overview, utility data box, which is our usage platform. Really stick around for that. We're going to do a quick little demo on that. We're really excited to feature that and some of our strategic solutions offerings. We'll get right back into the market update here. You see these slides here. We're licensed all to regulated states. One of the things we emphasize there is just limited availability. That is really for large customers. And you know, we had a lot of calls last month about Wyoming, Montana, Utah. These are really maybe kind of feature stuffs or super large customers. So that's for limited availability. Focus on the ones in the blue and the green there. And we're partnered with a bunch of suppliers. We're probably going to increasing this up to near 100 right now. We're going to recalculate this and get this going next month. We should probably be well over 100. So stick around for that. Now I'll just go right into the market update where we left off. Really, I always want to talk about natural gas as a kind of why it's important, why we talk about natural gas prices when we're talking about power prices. Really, if you look at this, natural gas over the last decade or 12 years is really taking over as a fuel on the margin. So we're going to really put prominent focus on that. As a fuel on the margin, it's the price setter. And with the natural gas generator, fuel is the vast majority of the cost of producing the power. So as the natural gas price goes, so will the electric price. And you see here as well, you see the correlation between natural gas prices and power prices. This is PJM West Hub. And we'll give a little bit about ERCOT as well. Here's ERCOT. I normalized February 2021 as an outlier there because there were some other issues going on, not just to do with power, but sometimes as well it goes out. But in general, as you see, it really just correlates through. So now I just want to get into actually what's going on. Look at this. Last month, we were right at the tippy top here, and we've had quite a plunge. We're going to get into why in a second. But this is the 1 year strip out starting from August 22 through July 23. And as you see here, we've pretty much dropped down from around $8 and that strip down to, we almost hit around $5, and we steadied in here in that $5 to $6 range here in the last week or so. But this really has been a huge drop. And the reason why is because this Freeport LNG export facility and some issues there. Last month, it was interesting. I put one of the last things, kind of miscellaneous things to look out for, was the possibility of, say, Russia bombing some import facilities in Europe. And it was just an outlier thing I kind of put out there as a possibility of a bearish case situation, because obviously if that happens, then our exports can't go there, and we'll be keeping some of them here. Well, there was an explosion here at an LNG facility, at an export facility, so even closer to home. And the Russians, I'm not saying they bombed. I know there's been some conspiracy theories out there, but it happened. This happened, and these things do happen. This is gas, and really what happened here was on June 8th, pretty much right after our last call, there was a problem with the safety valve, caused an 18-inch pipe to overpressurize and burst, and methane that caused a explosion and fire at the facility. And so that's really cost about 2 BCF a day of natural gas that would be kept in the U.S. until the facility is repaired. Well, it started out at first, of course, the market kind of like whoop, fell off. 30 days, it's going to be down maybe 60 BCF. So the market fell off, a little chunk like 30, 40 cents in gas. And then, a few weeks later, a week and a half later, they came out and said about 3 months. And we're like, oh, okay. And then you have that day where the gas is down about $1. And everyone's like, wow, this is crazy. And everyone's going nuts. And now last week we had another big down day where it plunged into got a 5 handle in the front month. That's because now we're talking about a 6 to 12 months before it's fully operational. And the big reason behind this is regulations are a huge cause of this delay. They got to develop a plan. They got to inspect and approve the plan. This is all federal regulations, and then inspectors need to approve it. So now we're talking at 6 to 12 months. Now that's pretty significant. That's quite that's quite a bit of gas that's going to be offline. We're seeing like a 6-month impact would be an additional 300 to 400 BCF of natural gas being put into storage. You know, so that really flipped the script here on kind of the risks of in winter of having a severe risk of a huge shortage here in gas and thus prices just escalating where there's an outlier risk of it hitting that, you know, into the teens in the $20 area. That's pretty much off the table now. Although in the winter, Northeast power and gas prices could be impacted because LNG is imported in that region on those very cold days. That's how they get their next excess gas, because, you know, pipelines can't go through New York, and you know, so they're going to compete with Europe for this LNG. And here's the natural gas price here. Here's the shift. The blue line was a month ago on June 7th, and now it's down. This is looking at the prices going out through December 25, and you see the big drop there in that next 12 months, and, you know, really kind of less significant drop in the later months in outer years, where we still see significant value out there as well. And here's the March April spread. This is kind of the winter to, you know, next spring. This is kind of the is a big risk metric here. And you can see now we're normalized back down under $1. We were hit around over $2. So it's been cut in half. This risk spread's been cut in half since that Freeport announcement. And now you see here's the prices out here, the calendar strips are at. We're in the 4 area now for every calendar year, 23, 24, and 25 in gas. Power's come down quite a bit as well throughout, and you see here is the drops. So a $1.53 drop in 2023 gas, $14 in ERCOT prices. You see that throughout the curves. 2025, kind of, even though gas has come down a little bit, power has gone up. Really, anything, the heat rates have kind of increased. So the power has not come down as much as the gas has. And now you see here, so here's just kind of throw out there another risk, and this actually has heated up even more. Where in that southeast is now in the above. So the entire U.S. really for the rest of the month of July. I know everybody in Texas here sees this and they're like groaning. I can sense it. That, oh my gosh, we're continuing on. I mean, I'm down here in Dallas this week and it is pretty hot. This is going to continue on through in July. We're already in probably one of the hottest summers on record here, and maybe a possible top 5 to 10 summers, definitely in Texas, but throughout the U.S. entirely, we're getting there. And this continues to have risk, even though we're getting this 300-400 BCF. This kind of cuts into that extra. So, you know, storage picture isn't, you know, we're not out of the woods. We're just looking out of the woods. Still a risk of severe winter, and that's why we're seeing prices not drop even further down in the front. And here's a gas storage situation right now. We are, you know, just going above that green line there, above the minimum. You know, we could see this kind of clicking up here. We're expecting storage to kind of, you know, stay above that minimal level, whereas before this Freeport thing, we thought that we probably might fall behind it by the estimated storage at the start of winter 23. And you can see here's a kind of, if you look at historical builds from this current week till the end of the season, here's where we'll be at. We're expecting this probably right now, considering Freeport will be kind of like relatively off the line through the end of this storage season. We'll probably hit around that 3,400 level, which, you know, is good. It's higher than the minimum, but you know, we could still, with severe winter, we can still have a 2,500 draw, which would put us under our TCF. But, you know, 3,400 is better than 30. Like last month, we were expecting this for around, you know, right above 3,000. So under 3,100 or 3,000. So that little excess is huge. And that's why you saw that risk spreads come in on that. And then here's, you know, relative production underperformance. We're still producing less than what was expected. and it seems like it's kind of plateauing here a little bit again at this 96 level. We'll see what happens here, but we're still not producing as much as we expected, even though the prices were high for a bit there. You just can't get this out the pipelines to build it out. And now just looking at the future supply-demand imbalance, and this is why we think that there's that value. Gas in that mid-4, low-4 level, power prices in the $40 level area. We just, truly believe you're not going to see power prices again in those 20s and low 30s. It's just not going to happen for a while. Lessons have been learned by the producers, but this is kind of an estimate here of projected supply and demand growth through 2026. So, and this is, again, BCF a day. So you see there, the best case scenario, a max estimate on supply increase, about 16 BCF, which is just slightly above the low estimate of a demand increase. And that, that balances out, right? But what if it falls in the middle of each of these? That's a supply demand imbalance there, and that's going to be very bullish for prices, where prices are right now, relatively cheap compared to where we've been and where we could go. And just some other market developments we see. PJM capacity prices, these were released plan year 23-24, was came in much lower than the previous planning years, kind of relatively at some of the lowest levels we've seen. So you'll see there is reductions there, and power prices will be reflected in that on renewals going forward. And if you're floating capacity, you'll definitely receive the benefit of that as well. There's some EPA regional ozone rules, some Supreme Court rulings whereby rules can't be set just to kind of change, for instance, a macro kind of view of picking generation sources out. On a national view, states can still have their own stuff. This rule is done because relatively, coal and emissions kind of float over borders. But we see a minor impact on this. It's kind of overblown that, coal is going to be coming back. No one's plans that no one's going to take these things out of mothball situations. No one's necessarily going to take them off plan to take them off the grid. So we don't really see a tremendous impact from that. One other thing caught my eye was discussion in Europe amongst lawmakers of designating gas and nuclear as sustainable energy resources. So it'd be interesting to see if that has legs around the rest of the world. I mean, Europe is kind of the impetus of the whole climate change action and agendas and the Paris Accords, all that. So this would be interesting to see where this kind of goes if it sets it globally. I think it's actually a positive situation. And as far as relatively speaking of making things more sustainable and make us get there quicker, so when more carbon free, kind of less carbon in the atmosphere. Is also could be kind of bullish for prices, because it could make it more gas plants and stuff like that, which is fine. But and then Texas LMPs, so far the grid's holding up pretty well. We haven't,
despite the conservation alert.
I mean, like I said, I've been here in Dallas, and I was a little nervous, like, oh my God, what's gonna happen? I should bring my survival kit with me or not, and but I do have a flashlight packed in my bag. But it looks like it's holding up so far. In fact, LMP price was surprised. I think it was on Monday. We were expecting there was hours we were expecting to around 3,000. It was day ahead was hitting around 3,000, and the real time was going under 100 or under 100. And real time day ahead spread that day was $300. Real time below day ahead. So it's quite crazy. I mean, so this is holding up. We're getting good response. I think there's a lot more demand response on. People are actually kind of like, knowing prices are higher, or actually cutting into their load and reaping benefits, all the programs. So this is good, but getting through that. So far that's holding up. That's really, I just want to talk a couple of things about strategies. Again, be disciplined. Remember, these customers are not taking a long position when they're buying power. They're covering a short position. That's important thing to remember. If you are expecting to be in business in 2024 and 2025 and you do not have anything bought yet, you are short that power. If power doubles, you got to pay that. The only way you take yourself out of a short position, which is the most dangerous position if you trade commodities, is being short. The only way out of that is to cover it. That's to buy something. So remind that to your customers when they're doing it. So with that, a couple things. One is set strike prices softly, or we can definitely have the programs here where you can set them up with suppliers or with us, and we can definitely get that price for you when it comes. But really, it's the best way to participate in a market dip. So in these situations, because we've seen them multiple times here, even in the past month, where it dips $1 and then boom, it's back up 50 cents the next day. This kind of like gets you that action if it's there. If the price hits it, it's there. You don't have to like go to a board meeting and get approvals. And lastly, just hedge something, man. It's like take advantage of these drops, hedge partial, percentage load, something. The markets are extremely volatile. Try to hedge something. If a market drops and you only have 25% hedge, you can participate in that drop even more by averaging a continued lower price. And if it goes higher from here, you at least have something in your portfolio, in your position.
You've got some coverage is better than nothing.
So I'll let Allie now take it away.
Perfect. Thank
Yes,
you.
overview. And again, apologies for that disruption earlier with the volume and audio, but we seem to be going well now. Thanks for your patience.
Yeah, thank you guys, and appreciate your bearing with us. We mentioned at the beginning, but I think we were probably having audio issues, but this webinar is the next installment of our ESG series. So we're going through market updates and ESG offerings within the Box portfolio. Just for everybody who doesn't already know, ESG stands for Environmental, Social, and Governance. They are criteria or initiatives that basically govern socially conscious investors or larger companies. Your enterprise companies are paying very close attention to these criteria, initiatives, and incentives around them. Given that we are in the energy industry, we really focus here on the environmental sector. That goes into optimizing and tracking your energy usage, looking at carbon emissions, understanding and taking advantage of green energy initiatives, focusing on sustainability and energy efficiency. We've got a full suite of these services, and I know we have done some things in the past just looking at the full portfolio. Last time we focused on community solar and had a really amazing response. We are working to build out even more resources for you guys, and we're really excited about that. But right now, we're going to take a look at Utility Data Box. And Utility Data Box is essentially a platform whereby building managers or brokers have additional insights to a customer's energy usage. I don't know if everybody knows this, but I thought it was really cool. Buildings in the United States spend upwards of $450 billion per year on energy and represent 40% of national energy consumption and emissions. As cool as it is for every individual user to, to tick up their thermostat just a little bit on some hot days, really we're looking at that large 40% coming from just buildings in the United States. And those buildings, for the most part, are going to be your larger buildings. They're going to be your commercial manufacturers, commercial real estate, large multifamily homes, etc. We'll go into some of that in a little bit. One solution for this is going to be Utility Data Box. I always say in order to reduce this type of in order to reduce your consumption, you first have to track it. In order to manage some of these pieces, tracking and these types of insights are going to be absolutely invaluable. Not to mention that there's really other cool features that just equip our brokers to look like absolute rock stars for their customers. They're able to generate a better level of reporting, able to pull together trends in invoicing, things like that. So in general, Utility Data Box is solving a lot of issues that come with manual reporting, siloed data between different service providers, whether that's tracking your supply contracts or forecasting what your utility and delivery charges are going to be. This is very helpful in identifying ROIs when it comes to efficiency projects, or looking at sustainability reporting, benchmarking, some of those pieces. So if any of that sounds good, you're going to love this. Energy management software users have reported median energy savings of 17% annually. That is a really, really strong number in a market that currently is just not doing anybody a lot of favors. And 91% of those same users stated that they couldn't have achieved this without their energy management software. Again, you can't manage and optimize what you're not tracking. And so this is the very first step in tracking that. So with that, we are going to take a look. We're going to do a really high level demo very quickly of our utility data box platform. That is right here. So as you'll see, we have a few different modules over here on the side, just highlighting the different capabilities of this platform. We have invoice management, reporting, sustainability, budgeting, and peak load identification here. In general, guys, what this platform does is this allows you to aggregate data across a large number of accounts from any supplier, from any utility. This platform, once a customer's account is enrolled, will pull data from a variety of different sources, whether that's actually the customer's distribution company, whether it's EDIing into a supplier, looking at different ISOs and RTOs as they are charting real-time pricing or day-ahead market trends, those types of things. It's also pulling in all of your invoice data. So if you're looking back and you're saying, okay, well, what did my ComEd bill do over the last, 18 months? How does this February compare to last February? Those are all trends that this platform makes it incredibly easy to report on and to show your customer. It's going to help you, like I said, just look like a rock star, because you're going to have all of this data in one place, readily available. You can very easily become their go-to energy guy, who they call regardless of what it is that they need. If they're looking and they're saying, hey, what's going on with this invoice? I noticed it was higher. You're going to have access and insight to be able to share, to go back, look at that invoice, pull it, and look at exactly what's going on. You no longer have to depend on your customers to provide you with that data. Once they're in the system, you've got it. And even better, if that would be something valuable for your customer to have eyes on, you can even share that with them. In general, we've got this, just so you guys know, this is our demo platform. So this is demo data, so don't be too hard on it. But we've got that's why some of these performance pieces look a little funny. But in general, you can track your consumption performance, you can track your financial performance, you can see where your properties are. You can look at that performance in a number of different ways. I'm going to go ahead and look at our budgeting tool, just because I really, really love the level of detail that it gives to each facility. So I've clicked into one of our sample facilities here, and we're going to take a look at it. It's going to show us our usage, it's going to show us our delivery cost and our supply cost. And now, as you see, some of these months haven't happened yet. This is a forecast. So when the data is known, when we've got known data, that's what's going to be shown here and pulled in again from the utilities or from the suppliers. But it actually is capable of forecasting all of those different pieces, which is really, really super cool. You'll see that it has this budgeting broken down a number of different ways. So we've got total consumption, total cost, and then going into supply versus delivery, which I know we get questions about all the time. I'm sure you guys do too. So this is a really, really exciting tool to be able to play with. Moving into our invoice management, like I said, this is aggregating everything from a number of different sources. So you can come in and see where we have, for example, an estimated bill just based on this one property. You can see the ways that all of this breaks out per invoice, and you're able to access a pretty robust suite of analytics whenever it comes to looking at those invoices too. Something that's really exciting is that because this platform is an intelligent platform, whenever it's pulling together all of that data, if it sees something that looks strange, a tariff that looks erroneous, or like something has been misapplied, it can reconcile that and let you know. So the system itself is a very powerful tool for capturing some of those pieces.
It's automated bill auditing for you.
Yes,
right,
which is super exciting. Again, you cannot manage you cannot manage what you're not tracking. So this invoice part is really super cool. And again, all of this is pulled in automatically via the system. So if you're ever looking for your customer's most recent bill, it's right there at your fingertips. And then finally, moving into our sustainability piece right here, just going to go in here. We've got a number of different ways that we can report on customers' sustainability goals. We've got a list of properties here. We've got their emission scores. We've got how they compare to peers. And even if you're buying RECs, ancillary of your supply contract, you're not wrapping that in, but you're just buying it as an add-on services, you can track those contracts through here and see how they're applied. So very, very excited about this platform. I am super, super excited to get started working with some of you guys on this and with some of our customers. This really, truly provides just a level of analytics, a level of detail that allows you to better serve your customer, whether that's making recommendations on a future supply contract and product, helping them to take advantage of local energy efficiency incentives, whether that's tracking RECs. I mean, just any way that you would like to show your customer some data and some additional opportunity behind that data points to, this is the best system to do it. So we're excited to work with you guys on it.
Yeah, I'd like to also add as well a couple things. One is that we have the peak load management on here. So which will tip off when there's potential days of a capacity PLC. For instance, PGN there's 5 days, and MISO there's 1. Even CP notifications in Texas, just kind of these days where it can help cut those costs in the future for customers if they do some load shaping during those hours. But also everything's downloadable into Excel format. There's also set reports you can do, PDFs. So you can walk into meetings with customers and show them this data and the tools and how you've audited their bills and all this stuff. This doesn't have to be sent. You don't have to have a customer have a login. You can have it yourself and just come in with these reports. So it's a way to make you look smarter in front of your customers and also truly help your customers in that manner. It's not just show, it's something that you can truly help them with and bring value. And that whenever you bring value to a customer, you're building the relationship and building the trust, which helps with trying to help out the broker consultants on the call here. That's all I got there, really.
Yeah. Cool.
Yeah.
I'm going to get back into our PowerPoint here. We skipped our features overview, so I'll get right back into it right here. In general, this is a full suite, easy to read analytics to optimize energy and usage efficiency. You can forecast budgets, you can create customizable reports, you can download to Excel, a PDF, whatever is going to be easiest for you to work with, manipulate, brand yourself, however you want it, we can get it to you. You've got your peak load notification, which can alert you, it can alert your customers. It's alerting us every day, and we've gotten a ton of them lately. It's got automated bill auditing and sustainability reporting features. So we are super excited about this. Now, I think we are over our time by just a little bit already, but if anybody has any questions, we've got a couple minutes here.
We do have one question. What is LNG? And that's a great question. And my apologies if I didn't explain that more on the call. But really, I mean, think about if you were an auto manufacturer over in Japan, you're able to shrink everything down by 600 times smaller. So you can take that car and turn it like a Matchbox car and just put it on a container and ship it. How awesome that would be. But that's really what LNG does. It's a way, really, what it does is it's gas, natural gas, has been cooled to a liquid state, native 260 degrees Fahrenheit. Gosh, I think we'd all love to jump in that for a little bit out here in
Sign
Texas.
me up.
Yeah, but for shipping and storage, and then the volume of gas is just kind of kept in 600 times smaller than its volume in a gaseous state, and which in a natural gas pipeline. So they put it on these containers, these tankers, and then they take it out overseas, and then it goes to Asia and Europe, and get sent off. Now these terminals to build them, the export and import facilities, are definitely the export facilities. These things cost billions of dollars to make, and good 2, 3, 4 years to build out. So hopefully that answers your question. But yeah, it's just basically gas. It's put in this liquid state. It's shrunk way down to put more on, put in a tanker, and so it's liquefied natural gas, LNG.
It looks like we have another question, which is great. Is this new service complementary with Box, or is there a price associated to use these new tools? Which is a fantastic question.
Yeah.
Yes, there is a cost associated with this, but it really greatly depends on your customer, how many accounts they have, how much they're using, and there's a number of different ways that we can accommodate this cost. We can wrap it into their supply contract, or it can be billed separately, just depending on how the economics look best. I recommend, if you have customers or if you have a portfolio that you think that this would be really good for, if you're interested in using these tools, please reach out to your account manager and have that conversation in a little bit more detail. The more we know, the better information we can provide. This is something that is new for us, and we're happy to figure it out together.
Yes, and with that, I would like to say as well, we're going to have some marketing slicks in this for you guys. Talk to your account managers. Your account managers have been educated on this, and if you want, we can work on a demo with you guys and show you this in person live and answer your questions. But also, it all depends on the usage of the customer, because there is a cost here for us to put this in here in the system and all that. But it's relative to these first 100 accounts here, we're going to get signed up. We're doing them do for free. I mean, obviously, if it's a 20 kW account or something like that, we're not. But these first 100 accounts, they're free. So first come, first serve basis. Start talking to your account manager. You have some accounts that you would like to put on this and check it out and get it going. We're just trying to get this out to you guys. Just check it out and really prove to you what the value this is going to bring to you and your customer.
Cool.
Yeah, so just talking a little bit about our strategic solutions here at the end here, and this is real brief here, but relatively speaking, we got providing pricing strategy and sophisticated price options for large customers, in-depth contract and usage analysis. We have custom prices, proposals, and presentations. So we can develop these kind of more custom presentations, proposals, help you out with that. And also do in-depth contract and usage analysis. That's invaluable service we can do. We can look over and really kind of negotiate fine terms and contracts with suppliers and make sure the customers are getting what they want. And that's very important these days, especially with capacity prices and how these change. I think everybody's going to wake up calling MISO. My capacity is skyrocketed. There's going to be a lot of changes in that bill where they thought they were getting fixed price. So we want to make sure everybody understands what's involved there. Custom pricing solutions. We can come out with some, definitely innovative ways to procure your energy. We have demand response and management programs. One more thing on that, I don't think we touched on it because it's definitely for a larger customer, if it's a megawatt or two. But we can get into where we can provide real-time load analysis. So if a customer is interested in having real-time on a utility data box and seeing what their load is in real time right at that moment in time, we can do that. They also then can run through usage analysis with that on the hourly basis and see where our usage was, and that can even pinpoint even further extra savings that can go. Target pricing recommendations. Absolutely, we have these capabilities. We have community solar options. This is definitely one for the smaller customers. We're building out platform here where we're going to have multiple offerings in any states is viable, as we discussed in the last call, and we've been signing up quite a bit here in the past month since that call and our offering on that. RFP management execution. We can run an RFP. We have the capability to do that. We have the language to put together. We send out, do an actual whole formal RFP if that's a requirement by that place or a desire. And market timing and knowledge. Again, we can discuss ways to time the market appropriately, time the hedges in there appropriately. And lastly, on-site solar analysis. If the customer is interested in on-site solar, we can do an analysis for that. Of course, customer size constraints, and relatively speaking, it definitely is important to know going into this that these things aren't necessarily economical compared to electricity right now, but they are sustainable energy that's on site, and in some cases we can get pretty close to kind of where the 15 to 20 year rate could possibly be at. And that's really all we got. Oops. All we got today. Yeah, got it. Okay. All we have today. And again, appreciate everything. Thanks for all your questions you have. Thanks for being here on this call. Thanks for your business. And again, also thanks for your patience this morning. That little hiccup delay, 3 or 4 minutes with the audio isn't working.
Yeah.
We look forward to next month. Next month will be, what did we decide?
August 10th
August
is going to
10th.
be our next installment of this series. So
Yeah.
we will talk to you guys then.
All right. Have a great day, everybody.
Thank you.